Hey all, welcome to the next episode of loan syndication reconciliation. So today we'll discuss the fifth important term of loan syndication as a delay term loan. So how it is work, and we'll see the features example as well. So let's start with the definition. So delay term loan means the loan full repayment schedule is postponed for the certain period. So whatever the installment of a loan, if it get delay, so it's come under the delay term loan category. So key point, borrower can receive fund but not need to make a payment for the period. Example, 6 month to year. Allow borrower time to stabilize his finance and use the loan for the growth before starting repayment. So here some time get exemption may be 6 months or 1 year according to the loan agreement, that borrower do not need to pay the repayment of a loan like interest or pay down or some principal amount for certain period, and he should work on the area where his business can grow. So it come under the category of delay term loan. So to get more info and get more clarify on the delay term loan, we'll move to the next part. So reason for delay in the term loan. So it is a borrower cash flow. Sometime the borrower did not maintain his cash flow and he did not have the certain uh, cash to make a payment of interest and pay interest or something like principal amount. So maybe in the time of that it get delay. So borrower may need extra time to generate sufficient cash flow. Business strategy, help with the project that need to develop before they can generate a return. Means if the business strategy should be what they have planned is not worked correctly, so they get a time to maintain his business and then he can pay the loan amount. Syndicate structure, the syndicate may agree to delay to ensure smoother financing for the large project. So syndicate also agree on that part, that he needs some time to refinance his business and then he make a project because this project is a large. So how delay term loan work in syndication? Step 1. So loan agreement will be there. Lender agree on term including the delay payment schedule as well. So when they are doing the loan agreement itself, so he will mention, the borrower will mention that I will not able to pay a loan for the 6 month, the repayment of interest for 6 months or maybe 1 year is already decided. The fund is when borrower receive the loan amount, whatever he required, he receive. Interest during delay. The borrower often pay interest during the delay period, and through it might get lower than regular payment. So if borrower is not able to make payment on time and he requires some time, to he has to pay additional payment to the lender as a part of a delay. So how it get calculated, we'll see in the example. So repayment begin after the delay, full payment interest plus principal plus interest will get started. So benefit of the delay term loan for borrower, immediate access to large funding without making immediate repayment pressure. So as we discuss in our definition part as well, he get a large amount but without starting from the repayment, means he get a time for certain period as per the loan agreement to repayment started of principal and his interest. So he get a benefit of that. So time to implement business strategy to recover the financial challenge. So he also get a time to manage his business strategy as well as the financial challenge. For lender, higher interest rate due to the risks of delay payment. So lender also take a advantage because the borrower is not giving interest on time and he needs some time as per the loan agreement. So they will charge a high amount of interest rate as well, because if we discuss about a term loan, so term loan already decided in loan agreement that on that time he will be able to pay, the borrower will pay the interest. But here in delay term loan already decided in loan agreement that borrower will pay the interest after some time of 6 months and 1 year. So that's why he is charging more interest. So more secure lending by structuring repayment for the borrowing long term benefit. So already decided on the loan agreement, so according to same he will get a repayment of his loan for long term benefit. So why this is long term? Because maybe 15-year 20-year it will get, and the lender will take advantage of interest rate for the that long period. So risks of delay term loan. So what are the risks for borrower? Higher term loan interest cost due to delay. So due to borrower, uh, for borrower side, maybe if not able to pay the payment in right time and he requires some money, so he is to pay the interest rate as well. Very high risks of repayment becoming unmanageable in if cash flow not included. If he asking the time for 1 month, 1 year or 6 months, and that time he is not able to match the meet the cash flow and improve his plan, so maybe he get a default as well. So this is a risk for the borrower. For lender, potential repayment default if borrower business does not perform as expected. So borrower also, lender also get, if he get the money, he give the time, he give the money, and the same project is not working very well, so it will be default for lender as well. Extended monitoring requirement for track borrower financial health. So lender also will keep deeply on the what borrower is doing with that money, is investing in the right part only, or maybe he is wasting his time and money. So he is to check regular financial statement as well. So we'll see the one example scenario where a construction company borrow 50 million syndicate loan to developing new building. So here we take example of construction company and he want to build a new building. So delay period, no repayment required for 1 year while construction is ongoing. So what lender and borrower agree that he did not want money repayment, means he did not want any principal amount, interest or any pay down or something on for 1 year, because they are doing the construction. The outcome, the company complete the project, sell property, use the process to begin repayment. So what he did, he construction company build the payment and he is starting reselling this property. Maybe he has some shop complex, or maybe have some flats, or maybe some apartment. So accordingly he will sell and he will start the repayment. So this is a perfect strategy or perfect business plan, so it will be given. So key takeaway from the delay term loan. A delay term loan is tool to erase cash flow pressure from the borrower. So mainly delay drawdown is used for the releasing the pressure from borrower, and when he get a money, he will start the repayment, as we see the example of a construction company. So postponed repayment for the certain period will be paying interest. Okay, so if repayment get postponed, so he has to pay the that interest part as well. Risk and reward, beneficial both carry risks for borrower and lender. So it will risk for the borrower and lender, because borrower is asking some time to get stabilize his business, but if not able to meet his cash flow and not able to meet his business correctly, so it will be the default for the borrower as well. And for lender part, it will be something like uh, he is given the money to the borrower, and 1 year he is not getting the money, and after 1 year he get to know that he is not meeting the business, so it may be default for lender as well. So flexibility and financing help borrower to manage large project with complex financial need. So it give the flexibility and financing as well. Financing means he is getting some time to stabilize his business. Flexibility means he can be able to make a payment as well. So we see one example of delay term loan. So we'll start with the borrower. XYZ is a corporation. Total loan amount is 800 crore. Participant bank is XYZ. So X is paying the role of a agent bank. That loan tenure is 8%. 8 year, the interest rate is 9%. Reason for delay is regulatory approval delay. And what is the loan start from? I think it will be in date. Okay, so loan start date is 15/1/025. So why it is get delay? Here the reason is mentioned, the regulatory approval. Regulatory approval means the approval from the who give the approval. Like if he is in construction company, so PWD company, or maybe if he need electricity, so that electricity is not get approved, or maybe if some he is building some financial institution, so RBI or SEBI regulation is not get, so maybe anything will be there, legal or maybe political or something, so he is not getting the regulatory approval. So the bank commitment, what bank commitment is, X give 40%, Y give 35%, and Z give 25%. So accordingly 800 divided, if you total of this 320 280, so it will directly come to 800. So they have committed like that. So impact of this delay would be like this. The original start date is November 1st 2024. The delay start date is 15 January 2024. So around I believe 2 months will be delay, 2.5 months will be delay. The interest rate accrual start later, shifting to the entire repayment schedule. So what happened, the payment has been released on the November 1st, but the interest payment will be and the principal will be start from the January 15 due to the regulatory approval delay. So if they bank the lender is giving this leverage, so he will charge high interest, but this all should be mentioned in the pricing letter when they release and what they agree on that same pass. So adjustment of repayment, like this I tell na how if it get delay, so what should be there. So adjustment repayment schedule, annual installment principal only 100 crore. So annually they have to pay 100 crore as a part of a principal, so they have disbursed 800 crore, and interest calculated based on outstanding principal. So whatever the principal will be reduced, like first year he paid 100 crore, so now 700 will be less, so 700 on 700 the interest will be charged. First year it will charge on 800, and next year it will charge on 700. So we have calculated this as well for 2 years. So if you take the table, this table, so year 2025 XYZ bank principal, so first year it will disburse 100 crore, so according to share, like 40%, 35%, 20% will disburse. The interest payment also disbursed according to the percentage they have invested in total payment they receive. So next year again the principal will be same, because he required 100 crore every year. The principal will be same, but the interest will be reduced. Why? Because next year he has to pay the interest on the 700 crore as on this. Okay, so that's why the interest will be calculated. If you calculate 700 multiply by whatever the interest rate is there, 9%, and it will get come to this part also. Okay, so this how we have calculated. So key takeaway from this delay term loan. So agent bank X coordinate, communicate, and ensure that the revised repayment schedule align with the new start date. Okay, so here is delayed due to the some regulatory, so new start date has been aligned with this. Participating bank involvement, bank adjust their interest accrual and monitor repayment as well. Borrower responsibility, XYZ corporation adhere to revised disbursement and repayment schedule. So is new schedule has been decided as per the delay, and then from the January 15 the new sheet will be released for the interest and pay down, how it get paid. So this is all for the delay term loan. If you have any question regarding this, you can definitely ping us on the comment section, or we have a number also, so you can directly call us, it is also fine. So thank you so much for watching. Please do not forget to like this, subscribe this, or among share with other colleague as well or other friend as well, because if you share, it will helps to us to maintain more thing. So if you don't subscribe this channel, please subscribe, because in coming time we are releasing many important things, so you get us notifications as well. So that's why humble request to you, subscribe this channel as well. Thank you so much for watching. We'll meet you in the next video. Thank you.